Hello, hello, hello. Good, happy money getting day to you here on YouTube and also to you here on Instagram. We are going to be talking today about the Chipotle stock, but more importantly, we're going to be talking about where to find the money to invest in stocks in general. Now, why we're talking about Chipotle today is because Chipotle today has split. And for the past 3 weeks, we've been talking live here about stock splits and really educating you guys about what stock splits are, why you should be interested in them, how you can get in for significantly less than the previous price of the stocks, educating you guys to invest in the stock market, educating you on what stock splits are, just really drilling it down to a really simple way of understanding how these things work. Okay. So I realized that the folks who watch my channel are generally new to investing. And that is why I do my best to ensure that I'm not just giving you like the big advanced information, right? I feel like stock investing is so convoluted because, well, first of all, I feel like it's so convoluted and complicated seeming because I feel like it's that by design, right? I feel like it's made to be complicated and hard to understand and so difficult that most of us just check out, right? And if that's you, let me know in the comments if you're like, hey, I know I should be investing in stocks. I don't know how or why, not why, but I don't know how to do it. And because it's so complicated, I've just kind of like decided that it's just too much for me and I don't even bother with it. Right. If that's you, let me know in the comments here on YouTube or over on Instagram. And I'm waiting for a little bit for folks to get into the room. I realized some of the notifications just went out. So if you're watching on Instagram, hello to you. If you're watching on YouTube, hello to you as well. I'm so excited to see you here. This is going to be a really great class. So with all these Wednesday lives that I do, I try to make sure that I advise you guys to get your pen and your paper or have some sort of device where you can type notes on because I am here to teach and hopefully give you guys some information that you can take back and apply right away. If you're here on YouTube, do me a favor and say, hey. If you're on Instagram, do me a favor and say, what's up? So I know who I'm talking to. Let me know where you are calling in from or watching from. I cannot wait to get started on this because, again, for the past 3 weeks, we've been talking about stock splits. There's a number of large stocks that have been splitting recently. This is great because that essentially means that the stocks are at a discount, basically. And for those of you who have not been here before, I'm going to run through that really, really quickly. I realize we probably have some new people. And we also are going to have some folks who have been here before. So if you've been here before, just stick with me. I got to explain for the newbies because my mantra is nobody left behind, right? I don't want anybody confused. I don't want anybody like, wait a minute, what is a stock split? So I'm gonna run through that part really quickly to explain what a stock split is, why it's cheaper, why this matters. And then we're going to get into where to find the money. Because guess what? It's great to talk about investing in stocks, but you can't invest in nothing if you ain't got no money to do so, right? What's up in North Carolina? What's up, Roger? What's going on, everybody? Hey, T. Hey, in the mirror with Felicia and Jaleesa. Hello, hello, hello. So this is going to be really, really fun. All right. So make sure you go get your pen, your paper, your pencil, your crayon, whatever writing device or utensil is near you. And then also, or if you have a device that you can type on. Okay. So let's get into this. If you're not yet following me and subscribed on YouTube, you're going to want to make sure that you do that. I do these lives every single Wednesday. I'm here to teach. I'm not here just to provide motivation. I feel like a lot of people, they come on, live, they talk about money and it's like, oh, let's get all motivated and let's get rah-rahed up. But then it's like, what do we do? How do we apply this afterwards? Like, what's the game plan? What's the action item, right? Give me something I can take away and actually like make some of these moves that you've been motivating me to do. And so here we're not here to just talk about like getting excited about it. We're here to also say, here's how you are going to make this happen in your life. Okay. All right. So let's talk about what stock splits are. Okay. For those of you who are brand new, if you're brand new, give me a 1 in the comments. If you've been here before, give me a 2 in the comments. Okay. Whether you're on YouTube, which I'm watching here, or Instagram, which I'm watching over here. Okay. All right. So we all know what stocks are, right? So a stock. What's up, Deborah? Thank you for joining. This is your first time coming. I'm so excited to see you here. Welcome, welcome, welcome. All right. So a stock split occurs when a stock generally is higher priced. Okay, it's a higher price for the stock, and the stock or the company that's issuing the stock has decided that, hey, we need to raise money. Okay, so let's put a pin in that for just a second and run back to understanding why stocks exist in the first place. Okay. Hello, hello, hello. I see some newbies here on Instagram. We got, let's see, on Instagram, we got Miss Cat322 and D-Man GT. And who else? Yep, that's the newbies. And then Mr. Porter, Roger, and HR Pro. What's up? Welcome in Instagram and over on YouTube, where it be popping on YouTube. We got Violet, Noah Plays, Valika, Deborah. So excited to see all of you guys. Again, if you're brand new here, give me a 1. If you're new, give me a 2. I'm sorry, if you're brand new here, give me a 1. If you've been here before, give me a 2. Okay. All right. All right. All right. So stocks are issued when a company decides that they want to go public. And when they go public, they're looking to raise funds. That is the point of stocks being on the stock market in the first place. They're not just on the stock market because it sounds good or because it feels good or because, it's the thing to do, right? Because there's a lot of companies that could be publicly traded, like let's say Oprah's company could be publicly traded. Oprah would probably make a shitload of money from the stock market if she went public, just because people love Oprah, right? People believe in the Oprah brand, all that sort of. Even if you don't like Oprah, Oprah got billions. So most people would invest in Oprah. Oprah has intentionally decided not to go public. One, because she probably don't need the money, right? But then two, she also wants to make sure that she retains control of her business. When you put stocks onto the stock market, hundreds of thousands of millions of people can invest in your company, and you may not, depending on how you have it set up, you may not end up owning the vast majority of your company, right? After a while, there's a lot of red tape that gets involved, and you may have less than 50% of your company if you have it set up that way, and then you lose control of how the company moves, right? So when companies put themselves on the stock market, they are looking to basically fundraise. And they're looking to fundraise for a various number of reasons. They may be looking to invest in R&D, which is research and development. They may be looking to they may be looking to take that money and grow or expand into different markets or create different streams of revenue for themselves. There's a lot of different things that companies will do when they decide to go into the stock market. But at the end of the day, the whole point of it, regardless of their reason, the whole point is to to put themselves into a position to be able to raise funds. And how do they raise those funds? They raise those funds by you and I taking our money and investing in shares of their stock. So in exchange for us giving them money for however much the stock price is trading at that particular day or at that particular time, they then give us equity in their company. So you literally own a piece of the company. So let's say you are a Starbucks lover and you're at Starbucks all the time spending money at Starbucks, right? Every day you're spending, for your, caramel macchiato or your, what's the lemon little cake thing that they have that tastes so good, right? That's like my thing, right? So if you're at Starbucks all the time, you're essentially giving them money, but you own nothing, right? You following me? You own nothing because you're just buying, you're a consumer rather than an owner. However, let's say that you decided that you wanted to invest in Starbucks stock. Now, not only do you own a piece of the company, but you also are, when you pay for your drink or your food or whatever at Starbucks, now you're actually investing in the company that you own. So the mindset is different, right? And the moves are different because you're owning a piece of something that you actually, I'm sorry, you're giving money to something you actually own. You're actually helping the stock price increase when you purchase from them as a stock investor in that company. Okay. If you're following me, let me know. Say, I got it. If you're not following me, say, I'm confused, because I want to make sure that no one is left behind here. If you see my eyes moving back and forth, that's because I'm talking on YouTube here and I'm talking on Instagram over here. And I want to make sure everybody's addressed. Okay. All right. Thank you, everybody, for being here. If you have not yet subscribed to my channel here on YouTube, make sure that you do so. Hit that subscribe button. Also hit the likes here and share this live so we can make sure that everybody is aware of this information because we don't want anybody to be left behind, right? There's enough money for everybody. Just because I got some don't mean you can't have some. Just because you got some don't mean your neighbor can't have some. Okay, they're not gonna stop printing money. Trust me. Okay, so let's make sure that we are sharing because sharing is caring. All right, so make sure that you subscribe and you hit the like button. The more that you like this, the more that you share it, the more that you comment, the more that YouTube will share it out to other people and other people will get this information. Same thing on YouTube, on Instagram. Please hit the give me a comment, by the way. Comment on YouTube and share this live so that other people can get in here as well. Okay. All right. So that's why stocks are on the stock market to begin with. All right. Now um let's talk about why stocks split. Okay. Stocks split generally when they are expensive. Now remember, I just told you that stocks are on companies put their companies put their businesses on the stock market with the intention to fundraise, right? If the stock is 55 cents, everybody and their mama are going to invest in it if it's a good company, right? If the stock is $20, a lot of people are going to invest. If the stock is $100, maybe even $200, a lot of people are going to invest. However, if the stock gets up to like $2,000, $3,000, $5,000, it's a lot less people who can invest in that stock because it's just cost prohibitive at that point, right? It's cost prohibitive for the average person to be able to invest in one share costing $2,000. And so when the stock price gets so high, the company will say, oh, we're not making it accessible for the vast majority of people to be able to invest in our company. So we need to lower the price so that the average person can invest, right? They're actually making their company more liquid, which means that they're allowing themselves to have more access to immediate dollars by doing so. And for you and I, that becomes a really great thing because now we can afford to say, okay, I'm willing to invest, $75 in this stock that I know is great. Let's say it's Microsoft, which is not, but I'm just using that as an example. I'm willing to invest $75 in Microsoft, but I was not willing to invest $550 in Microsoft, right? Because at $75, I can get multiple shares, whereas at 550, I'm either going to get one or none, right? Okay, so that's why a stock will split. You will not see a stock split if the price is already low. So a lot of times people think that because the price it seems like it's at a discount, right? They think that it means the company is doing poorly. And that is absolutely the opposite. Okay. Stocks will not split if the company is doing bad because the stock price is not high. If the stock is in the tank, if it's a $25 stock, what is it going to split to? Right? It's already cheap. But if the stock is expensive, then it's going to split. So in the case of Chipotle today, right? Chipotle stock split today 50-1, which is a huge stock split. Most stock splits tend to be like 20-1, right? Or I'm sorry, shouldn't be 10-1, right? So 50-1 is a huge stock split. That means Chipotle, that's an indication that Chipotle really, really, really wants to raise money and make it more accessible for people like you and I, what we will call ourselves retail investors, to be able to afford to purchase this, right? All right. So currently, as of yesterday, Chipotle stock was trading at around $3,200, right? It split 50-1 today, which means that the stock then became basically I think it opened today like $63 or something like that, right? Now, when I looked just a few minutes before I went live, it was trading around $66, which means the stock is going up, which is typical of a stock split, right? When stock splits, most people are like, "Ooh, let me get in." Everybody's racing to get in, and the stock starts to rise. Okay, so that's typical to see it start at one price in the morning, and by the afternoon, it's a different price. That's very typical, but that's also a good thing because you want the stock price to raise. Okay, so with that said, hello everybody on YouTube. Thank you for joining, you guys. Hello to you guys on Instagram. Let me do a really quick check of something real quick, because I want to make sure that I'm not missing anybody trying to get in over here. Give me just a second, you guys. You know how I am. I really, really want everybody to get this information because I'm like, we all can get rich. It don't gotta be just a few people. Give me just a second. Okay, that already went out. Okay, great. And then let me check one more thing. By the way, wherever you're watching from, do me a favor and say, hey, let me know where you're watching from? I don't know where you guys are. I'm in Detroit or near Detroit. I'm about 30 minutes from Detroit. Let me know where you're watching from. All right. I want to know where you are, where you're viewing this from today. Toledo, Ebony in Toledo, Oakland, says Karen. Good morning. Hello, good morning. Good morning. Virginia, says Miss Cat. Cali, says Karen. We got two Karen. Oh, it's both Karens. Same Karen. Karen is Oakland, California. Valika's in Louisiana. What part of Louisiana, Valika? Elizabethtown, Tanya. Where's that? How far? It's in Kentucky, but like where in Kentucky? Is it near like a major city? Let me know. Queens, what up, Queens? Tawana, Crystal's from Howard. I was say Howard from Houston. Den Jackson is watching. Denisha, hey Denisha, she's watching from Maryland. That's awesome. That's awesome. That's awesome. That's awesome. If you are a Naturalicious member or customer, let me know because I know there's a lot of Naturalicious people in here too. Love y'all for sure. Y'all always hold me down. I appreciate you guys. Malachi, you're in. Is that Malachi or is that Roger, Mr. Porter? I know two Mr. Porters. I can't tell which one that is. But if it's Malachi, I didn't know that you moved to Minnesota. If it's Roger, what are you doing in Minnesota? Let me know. What's up, Larry? Thanks for joining. Thanks for joining. All right. Yes, Mo Brown Sugar. Y'all make sure y'all follow Mo Brown Sugar. She has an amazing show. Amazing show. Give me just a second, you guys. I'm so sorry. 454-454-924. You know, these websites always want to send you these authentication codes all the time. You said it's me, Gwen, but which one? Is it Malachi or is it Roger? I still don't know if it's which one it is. All right. We're almost getting ready to get going. Sorry, this thing is taking a really long time. Okay. All right. Okay. We're good. We're back. We're back in business. Let me get back over to YouTube. Okay, YouTube. Sorry about that. Thank you for your patience here. Yes, Denisha, definitely. She says, hey, Gwen, definitely the Naturalicious, all the things. Cohort number 1. That's what's up. Fort Knox is where Elizabethtown is. Okay, sounds good. Valika says she's next to Baton Rouge. Love it. Valika says I've used Naturalicious. Awesome. I'm so excited to see all of you guys here. All right. So we talked about Chipotle. So Chipotle, like I said, was trading at about $3,200. And now it's around 66 today, which means that because it's split 50-1, that means for every one share you could have gotten yesterday. Okay, follow me here. For every share you could have gotten yesterday at $32 plus $100, you will be able to get 50 of those shares for the same price today. So even though the price is cheaper, it does not mean that the stock is less valuable. It's still just as valuable because if you currently had shares of stock in Chipotle, let's say you own one share of stock in Chipotle yesterday, today you own 50 shares of Chipotle stock. Okay. Why is this great? And this is why you want to find money to invest in the stock market. Okay. I'll tell you just a minute. This is great because if you already owned shares, and so if you buy a share today, right? If somebody already owned shares in Chipotle as of yesterday, they owned one share hypothetically. And then today, because it's split 50-1, that means that it's split 50 ways. So their one share is now 50 shares. Okay. Even though the stock price is lower, their investment is the same because if they invested $3,200 yesterday for one share, but today they have 50 shares at 60 some dollars, it's still $3,200. Y'all got me? Does that make sense? So it's still the same amount of money that they would have put in. Okay. Now, the price is 60 some dollars. When the stock runs back up, they will have 50 shares instead of just one. So let's say the price goes to $33,000 some dollars again, right? But now you got 50 shares worth $3,000 a piece. Let's do the math. Okay, let me pull up the calculator. Let's pull it up because this stuff gets me so excited. And this to get you excited too, because this can be you. Okay. So again, if you had one share as of yesterday at $3,200 and the stock split, now you have 50 shares. But let's say it runs back up to $3,200. So now you have $3,200 per share at 50. So now you made $160,000 passively. And you didn't do nothing. All you did was invest in one stock and it happened to split. This is why you need to find money to invest in the stock market. Because I think when we talk about passive income, a lot of times we think passive is synonymous with fast. And that's not the case all the time, right? Usually not the case. We think that passive income is income that we're going to receive immediately. And that's not necessarily true. It's only passive if you literally do nothing for it. I see a lot of like ads and people talking about passive income on, this on Instagram and social media, but it's not really passive. It's not passive if you got to work for it, right? It's only passive if you literally do nothing, as in the case of this. Okay. It's not passive if you have to, go into the office, even if you got to go into the office for, a couple of hours, even if it's not a lot of time, it's still not passive. Literally means you are passing time doing something else and you're making money while you're sleeping, while you're eating, while you're on the toilet, while you're playing with your kids, while you're living your life, while you're doing things that you don't spend your time involved in. Okay. So this is so key because stocks, but people think that when they invest in the stock market, they just make money because the stock price rises. No, 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 no. They do make money because the stock price rises, but they also make money because the stock price rises and the company has split their prices, right? Or split their costs, split the stock. I'm sorry, I'm thinking faster than I'm talking. The company has split the stock and now they're multiplied that. So let's do a little bit of more math, right? So let's say instead of just one share of Chipotle stock, let's say you own 10 shares, right? Let's say you bought it, when the price before was like, let's say the price was like 50 some dollars at some point, right? And now that stock is worth $3,200 as of yesterday. Okay. So let's say you owned 10 shares, just 10 shares of Chipotle stock. So if you bought it at $50, you would have spent $500. Follow me here. Okay. Mo says the price is actually going up right now as I'm speaking. Yes, it is going up as I'm speaking. It's going to do that. So make sure you get in there. Okay. So let's say you own 10 shares of Chipotle stock and you spent $500 to invest in it whenever that price was $50. If the price is now $3,200 as of yesterday and the stock split 50 to 1, so instead of 10, we're going to multiply that times 50. So if you had 10 shares as of yesterday, as of today, how many shares do you have? Y'all let me know. Y'all math geniuses, let me know in the comments how many shares you would have today if you had 10 shares yesterday. Let me know. If you had 10 shares yesterday and the stock split 50 to 1, how many shares do you have today? Come on, math geniuses. Not 5,000. 500. Yep. Not 5,000, just 227. 500, Linda and Sharon, correct. You have 500. So you're going to multiply it by you multiply the number of shares you had by the amount of the split. So you will multiply 50, 10, your 10 shares by 50. So you have 500, right? So now you own 500 shares of the stock you only bought 10 of whenever it was $50. How amazing, right? This is great. Okay, you said typo. All good, all good. 500, 500. Everybody said 500. Great. Because you guys are right. I knew y'all were math. I knew that you guys were my math geniuses. Okay. So let's say that stock, remember, you invested $500. We're going to put ourselves in the mindset that you, Mo, you, Alicia, you, Valika, you, Tawana, you, Crystal, you, Lynette, all y'all on Instagram, you invested $500 and the stock split today, and then it runs back up over time to $3,200 again. So let's do the math. So if you have 500 shares and let's say you put no more money in the stock, you never touched it again. It runs back up to $3,200. Y'all, do you know how much money you have? Do you know how much money you would have? Somebody do the math, because I feel like this is gonna make you feel like, damn, I should have been in this thing. So $3,200 per share times 500. That's $1.6 million. Yes, Linda. $1.6 million that you would have today if you had invested $500 when Chipotle was only $50. I mean, where are you going to get them kind of returns? Like, you could literally retire right now. Crazy. Great. Am I the only one who is like mind blown by this? That's why stock splits are so important. That's why stock splits are so important. And that's why you need to find the money to invest in the stock markets. Because I don't know about you, but your girl is all about the passive income. Your girl is all about like, hey, let me sit on my behind and chill. That is exciting, Karen, right? It's so exciting. That I'm like, listen, at this age and this stage of my life, I feel like I've worked very hard. And I'm like, I just want to chill. I don't, like I love what I do, right? I love talking about this. I love my haircut company. I love my inner circle group. I love the other things that I do. I love talking about this stuff, right? Because this is life changing. That is life changing money. Life changing money. Oh, Mo, you just invested in Chipotle? Mo just invested in Chipotle right now. Y'all give her a hand clap in the comments. In the mirror with Felicia and Jaleisha just made a purchase right now. Yes. Yeah. That's what I'm talking about. Let's be an action taker. Let's be an action taker. Right? So many of us, we get information and we just sit on it and we're like, oh, that's it. Or, I need to do such and such. Stop talking about what you need to do. Stop talking. You think long, you think wrong. Right? Because if any one of us had invested in Chipotle when it was $50, and you know what? Let's run it back and let's actually see when it was $50. Like, why not? We can do this. All we gotta do is go to Google and we can oh my gosh, y'all. It wasn't even that long ago. Wait. Oh, wait, I'm looking at the wrong stock. Am I looking at the wrong stock? Oh, okay. So let's see when it's $50. I got it. $50. It was $50. You guys. Oh, that's what the stock splits. Just like a few years ago. Yeah. Like sometimes since 2015. Like I'm trying to do this real quick. I don't have time to analyze it. But sometimes it's 2015. So less than 10 years ago, you could have got the stock at $50. Less than 10 years ago, you could have got the stock at $50. And within 10 years, you would have made $1.6 million if you had only invested $500. So where do you find the $500, right? That's the question. Where do you find the $500? Where do you find the $200? Where do you find the $2,000? Where do you find the $20? Where do you find this money? Because we all have bills, right? Just 227, the stock as of right now, because the stock market goes up and down throughout the day, right? Right now it's $66.16. So let's say you invested $600 today and you only bought 10 shares. Okay. When that stock runs back up, give it some time, baby. I'm excited for us. Now remember, passive is not synonymous with fast. Okay. Yes, Mr. Porter, money. Yes, money. Miss Cass says, I need this life. Yes, I need this in my life. I'm so glad that you are here to get this knowledge, right? Because again, when people talk about stocks online, it's so complicated. You see all these numbers and these graphs and these bar charts and these candlesticks, and they're talking about options and they're talking about, fractional shares, and they're talking about institutional investing and they're talking about retail investing. It's too much. But I feel like it's that by design. Because if we were aware of how easy it actually is, everybody would be investing in the stock market. And then where would the 1% be? The 1% got to remain the 1%, right? They can't be the 1% if everybody knows that, hey, in like 5, 10, maybe 20, 15 years, I could be a millionaire and have only invested like a couple $100. Everybody and their mama will find the money to do that. Everybody who has money for Beyonce tickets when she come to town, they would suddenly have money for investments. Everybody who has money to spend the average of $700 a month on a new car note, that's the average cost in America, $700 for a new car, right? They would suddenly be like, you know what? Let's not do this. I'm going to take that money and put that into the stock market, right? Ebony just invested in Chipotle. I love that this is happening in real time. I love this for you. I love this for y'all. What y'all doing on Instagram? Are y'all getting to it too? What y'all doing? Because over here on YouTube, they getting to it. They getting to the money. They ain't playing. So I don't know who's gonna win, but it looked like YouTube is winning right now. Okay. Karen says it's amazing to me that most people don't invest in the stock market. Yes, but you know what? Why, Karen? That most people don't invest in the stock market. Most people don't invest. We don't invest in things that we don't understand, which makes sense, right? And you shouldn't. You shouldn't invest in things that you don't understand because because people who don't understand the stock market tend to get fearful when they see the market going down. And they're like, "Oh my God, I put all my money in and now the numbers are down and I'm freaking out. Let me pull my money out real quick." Not understanding that the stock market by and large has gotten 10% gains over time historically, which means that historically the stock market is going to rise if you just leave your money in there. They also don't understand that the stock market tends to be a long-term game. It's not something that you're supposed to do or that you're expected to do for a year or, 6 months or even 5 days. It's something that you sit and you just let it wait. You just let it wait, right? You be patient with it. That's what most people don't do because they don't understand that. And so I feel very excited to be able to share this knowledge with you guys in a way that doesn't feel convoluted and complicated. Um, because this is not taught to us in schools. Most of us did not grow up in households where this information was known. If we did grow up in households where it was known, it was mostly like you should invest in the stock market. And that was it. That was the level of the education. But like how to do it, when to do it, why to do it, that wasn't really within our lexicon. Like we didn't really know that. Our parents, our grandparents certainly didn't have access to a lot of these things and didn't know. Further, the gatekeepers were there, right? So just 10 years ago, well, not 10 years ago, but like 20 years ago, you could not invest in the stock market easily. You couldn't buy fractional shares, right? So for those of you who don't know, fractional shares are when you don't buy a whole share. So let's say you did want to invest in Chipotle when it was $3,200, but you only had 1,000. You could have bought, essentially 1/3 of a share of stock at that time, right? By investing $1,000 versus $3,000. 20 years ago, that wasn't an option. And 20 years ago, you had to have a stockbroker. You had I grew up basically in the hood. Like I have no clue where to find a stockbroker, right? I had no idea back then, right? And most of us didn't have access to that or the knowledge of that. So like the gatekeepers and the red tape was there. And now that that stuff is gone, the 1% is like, like it's getting a little bit too accessible. Let's make this shit real hard to understand. Let's make it real complicated so that people check out and they don't invest their 401ks in the stock market. They don't invest their Roth IRAs. They don't invest their HSAs. They don't invest in their kids' college fund in stocks because we're going to just make them think that they're just supposed to use this for a savings account. As opposed to, hey, you put your money in here and you watch it exponentially grow by investing, right? If you want a savings account, you go get yourself a high yield savings account. I'm gonna make a whole video on that or do a whole live on high yield savings accounts, right? But if you want to save money, you go and put your money in a high yield savings account. If you want your money to grow passively and you do nothing and you wake up one day and you getting ready to retire and you got $2 million in it, then you invest in the stock market. Then you invest in ETFs. Then you invest, right? That's when you invest. But they don't tell us that because, again, like I said last week, companies and businesses, they get tax write-offs every time you invest your money into a 401k that they every time you invest into a 401k that they offer, they get a tax write-off. So they're real quick to say, hey, Denisha, make sure you invest in your 401k. Don't forget to invest in your 401k. Hey, Karen, make sure you get in on that 401k. You can invest up to $20,000 this year in your 401k because they get a tax write-off. And then guess what else? They get another tax write-off when they match. They're not matching because they like you. They're not matching because they don't have nothing else to do with their money. Of course, they want to attract very good employees, but an incentive for that for them is that they also get a tax write-off. It is beneficial to them for you to invest in your 401k or your 403b if you're a nonprofit, and it's even more advantageous for them to match. And the more that they match, the more that they get to write off. I'm not hating on them. I'm here for it, right? Like, save on taxes as much as you can, right? But they also very conveniently don't tell you, hey, while you're putting your money into this 401k or this 403b, and we are also matching this 401k and 403b for you, by the way, also invest it so that it grows exponentially. Because you know what's going to happen is that one day you're going to wake up, you're going to have a whole lot of money that you didn't actually put in. You're going to have more money in the account than you actually invested. You're going to have like $700,000 that's free money that came from stocks versus, let's say, 300,000, let's say 80,000 that you actually put in over time. I'm just using random numbers, okay? Because when that happens, now you have options. You have options. This job is not treating you well. Peace. I got $2 million in the bank, baby. I don't need this. Right? You get a new boss you get a new employee, at your job, and that employee seems to think that they're your boss, and they talking to you out the side of their neck and sideways. But you've been there 30 years and they've been there for 30 minutes. And you go to your boss and your boss is like, oh, well, just try to get along with them. Da 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 da. But previously, you have to say, you know what, I gotta eat this. I gotta take this. But you get to have FU money when you invest, and you're not a slave to anyone. You're not beholden to anyone. At that point, you're working at that job because you want to work at that job. You're there because you like it, right? You get to do things like money solves a lot of problems. And I know people say money can't buy happiness, right? But money solves a lot of problems. And unfortunately for us, the majority of people watching this video, we started behind the 8 ball, right? Because we didn't have access to certain types of information and all that sort of stuff. But if you can get to a point, it doesn't matter how old you are, it is never too late, okay? Whether you're 20, 40, 60, or 80, or anywhere in between, it is not too late for you to invest, okay? So with that said, let's give a shout out to Denisha over on Instagram because she just bought her some Chipotle. Come on, y'all. Come on, y'all. Come on, come on, come on. Yes, it's me says, no, it can't buy happiness, but it sure can provide some comfort. Ain't that the truth? Ain't that the truth? Velma says, it's important to invest in the stock market. I evaluate and ride it out. Yes, it's a long-term game. 100%, Velma. Thank you for your comment. Karen says, that's what I tell everyone. Buy and hold. Yep. You are right but you're right. People are afraid. Yes, absolutely. And she said, you make it very easy and simple. Thank you, Karen. Thanks for sharing your experience and excitement. My parents really weren't educated on investing. You're welcome, Karen. And you're 100% right. Like, neither were my parents. Like, our parents and our grandparents, and even us, we've done the best with the information that we had. But if the information is not there, like, it's almost like you don't know what you don't know, right? So it's like, well, go research how to invest. You go to Google, how to invest, and it's all this like complicated stuff, right? And then you just check out. You like, forget it. But not anymore, because y'all invested in Chipotle today, and y'all about to be bad. Y'all about to be balling. I'm so excited for y'all. Okay. All right. Let's talk about where to find the money. All right. Because you can't invest in anything if you don't have any money. If you feel like you don't, if you feel like you really, really want to invest in these things and be able to have access to um buy invest in opportunities like when Chipotle, splits, let me know in the comments. Give me a 3 if you feel like you really want to invest, but you're not sure where you're going to find the money to do so. Because quite frankly, unless you're using your already established 401k or your already established 403b or your retirement funds or something you already have money in, um, you have to have like money to do this, right? Like you have to have disposable income, basically, right? Because our livelihoods have to come first, right? We have to be able to um, buy groceries for our house to eat, right? We got to eat every day. We have to be able to pay for our housing, whether we're paying a mortgage or rent. We have to be able to, afford a car note if we have a car note. Like we have to be able to pay these things. So you have to have disposable income available if you're not already using your already established retirement funds. However, if all you have, this is the first point, if all you have available to you right now, we talked about this last week or the week before, um, if all you have is your 401k, then we're going to start with that. Okay. And that's great timing, Miss Jackie. She said, "Hey Gwen, is my 401k enough? I've got enough. I've got a bit of a nest egg, but I don't know how to do my own investments." This is Miss Jackie from cohort 1. Yes. Hey, Miss Jackie. Yes. So the first things first, it's where to find the money. If you have no disposable income, and we're going to get to where to find the disposable income in a minute. If you have no disposable income, the first thing you're going to do is to look at your already established retirement funds. Okay. And everybody who gave me a 3, I appreciate you guys for being transparent. Yes. Denise, yeah, girl, come on over to YouTube. She said she's switching to YouTube. Come on, the party over here, child. It's popping over on YouTube, right? So I always tell people like, come over to YouTube. Instagram, I love y'all too. But it'd be popping. The comments be on fire over here on YouTube. Okay. So y'all on Instagram, y'all a little bit more quiet. So anyway, your 401k, your 403b, if you have an HSA, which is a health savings account, right? A lot of companies offer this for you basically to save money into your health savings account for you to have money to use for your medical bills, right? Again, they get a tax write-off for this. And you know what? And the reason I know this is because I own a company and we offer a 401k and we offer a HSA. I know this because I'm a business owner, right? And we don't only offer it because I want to get a tax write-off. I mean, I definitely want to get a tax write-off, but that's not the only reason, right? I really feel people should be saving for their retirement. And the people who tend to work for one of my companies tend to be relatively younger and they're not thinking about retirement. So it's really important to me that they understand like, hey, if you start young, you can actually invest way less over time, right? So I try to really educate them and bring people into the office and give them financial education because they're not even thinking that way. They're in their 20s, early 30s. They don't be thinking like that. But I do get a tax write-off for it. And I'm just being transparent. Like, yeah, I definitely enjoy the tax write-off and we match. And I enjoy the tax write-off that I get for the match, right? But I also tell them to invest their money, right? I tell them to invest their money so that they can grow it. So Miss Jackie, to your question, yes, you can use your 401k. How many of you already have a 401k or a 403b or any sort of retirement fund? Let me know. Give me a hand wave in the comments. Give me a hand wave emoji. If you have an HSA, that's another option as well. If your kids' college savings, you're not going to use it for anything but college savings, but you should be investing that as well. Okay. So any sort of like money you can't really touch right away or not supposed to touch right away, that's money that you can use to invest. That's where the first place where you find money to invest in these sorts of things. So Grace, Tanya, Tawana, Miss Jackie, Karen, all you guys, Jen, all you guys have these retirement funds. Okay. The first place you're going to do that is to go to your retirement fund. Okay. And you're going to decide how many shares you want to purchase. In this case, we're talking about Chipotle, but we also talked about NVIDIA a couple of weeks ago. NVIDIA, when the stock split a few weeks ago, it was trading at $120. Let's see what it's trading at today. It went up and then it went down again. Let's see. NVIDIA is $123 today. So it's still relatively cheap. Okay. It did go up to like 130 for a while and then went back down. It'll go back up again. It's the most valuable company in the world, right? In the entire world right now. So you ain't got to worry about it. Okay. But again, if you don't understand stocks and you're scared, then you'll be like, ooh, it was up $20 and then it went down by like 14. Maybe I have to take my money out. Like, no, chill, just relax. Okay, just relax. All right. Oh, excuse me. Let me drink some water. Okay, so Ebony has it, Sharon has it, Denisha has it, In the Mirror with Felicia and Jaleisha has it. Thank you. And I think Felicia and Jaleisha, you're from ICS, right? I think you're from ICS. So thank you for joining. I appreciate you being here. What's up? What's up? What's up? Love my ICS family. Okay. So go to your 401k and look for Chipotle. Okay. What's up, Jeremy? The Chipotle stock is CMG. CMG. Okay. And I'm so thrilled that like 10 of y'all since I've been on here have bought the stock since I've been live. Like I said, I just love an action taker. I love somebody who don't just talk about it, but somebody who actually be about it. Y'all doing it. Like I told you, if you had invested for those of you who are new, who were not here when I mentioned this, listen, we did the math. We did the math together because all my math geniuses on here, we did the math together. Okay. I ain't just run the numbers. They ran the numbers too. If you had invested in Chipotle, if you had put $500 in, and I know if you got a 401k, you got $500 in that boy, right? Unless you literally are just starting. If you just start your 401k like a couple weeks ago, right? A couple of months ago, you got more than $500 in there, right? So if you had invested $500 when Chipotle was trading at $50, which was within this decade, okay, within the past 10 years, when it split today, 50 to 1, you would currently have $1.6 million because I'm gonna run this back for those who weren't here before, because the stock, let's say you spent 10, say you bought 10 stocks at $50, that's $500, right? And the stock split 50 ways today at a price of $3,200 yesterday. So that means that your 10 shares became 500 shares at $3,200. So 500 shares times $3,200 a piece is $1.6 million that you would have had today had you just invested $500 not even 10 years ago. If that's the case, all y'all will be quitting your jobs today. I guarantee it. Y'all wouldn't be there. Y'all would have all the FU money that you need. And by the way, if you are watching this on YouTube, do me a favor and hit the subscribe button if you haven't already done so, and like this page. Like this video, and then share it for me. At minimum, hit the subscribe button and click the thumbs up for me. I appreciate you guys so much. Let's get them likes up. All right. So those of you who have 401k, first place you're going to find your money is in your 401k or your HSA. If you got $500, please go today and invest in this, because with all the stuff that I hear people saying, you got to be careful what you listen to on social media, because people on social media are like, oh, well, people are mad at Chipotle because they're not putting enough chicken in the bowls or in the wraps. Okay, but the stock is saying something else, because ain't no stock gonna be $3,200 if nobody's buying it. It's just not. Somebody buying Chipotle, and I ain't never been to the Chipotle that wasn't packed. Never. Not after 5 o'clock. Not once. Have you? I've never been to a dead Chipotle. Ever. So when you are researching stocks to invest in, you got to actually research them yourself and not just go with what people say on social media, because that'll get you all messed up. Okay. So if you got the money, you got $500, you can invest $500 today. If you got $600 in your 401k, you can invest $600 today. Now, of course, I would never tell you to invest all of your money into any one stock or any one type of stock, right? You want to have a mixture of tech, retail, food, hospitality, all that sort of stuff, right? Denisha said, we just ate Chipotle last night. Girl. And Denisha, I don't know if you was here. Oh my God, y'all, I get so excited. Okay, Denisha, I don't know if you was here when I mentioned this earlier today, when I first got on, but I said, when you go to a store or a place or whatever, in this case, Chipotle, you go to Chipotle and you give them the money for the food that you guys ate last night, right? You are a consumer, and that's all that you are. However, now that you own Chipotle, because you just bought it since we've been live today within the past 49 minutes, right? Now you are an investor in your company when you buy Chipotle. So every time you go and you buy something from Chipotle, you're now investing in the company that you own. And you are helping that stock price to rise even more. That's a whole different mindset. That's a whole different mindset. Yes, Felicia and Jaleisha, she just bought some too. You are now investors in your company. It's crazy. And the thing is, you're not doing anything different. Your habits are not changing. You're not having you bought Chipotle last night. You probably gonna buy Chipotle next week, right? Like at some point you're gonna buy Chipotle again. So you don't have to like change your habits. You don't have to do this is literally passive income. Passive, passive, passive. So first place, go to your 401k. If you got money in there, I would advise that you at least buy 10 shares. Like if you can, buy at least 10 shares. If you can't buy 10 shares, buy 2 shares. Buy something. Something's better than nothing, right? This is the first and easiest place that you're going to find the money to invest. Okay. The first and easiest place. And please do this today because the stock price is going to rise. Now, a little bit of advanced information. Stocks tend to, when they split, they tend to rise and then they tend to kind of fall within like a week or two or whatever, couple days, and they go back up. Okay. But you don't know what they're going to fall to. Right. So let's say it's $66 right now. Let's say it rises to $80 because everybody's buying it. But then but then the rush, because everybody's buying it right now because it's so cheap, right? Once the rush is over, the momentum is going to slow down, right? And then the stock will fall a little bit. Generally, this is kind of like the habits of a stock split. The stock will generally fall a little bit, but it may not fall back to $66. It may fall to 70. And so like you don't want to take the chance of saying, like, well, historically they kind of fall. So I'll just take my chances and wait because it may not fall back to what it was at its lowest point. Right. So it's like you don't want to like go on a hope and a prayer. Like the price is what the price is today. So just get it today. Okay. Or get it as soon as possible. No pressure, right? The bottom line is that you get it. Even if you can't get it for a week, let's say you get paid a week from now and you're like, dang, I can't invest today because I don't have the money. We're gonna talk about where to find that. Next week, it's not gonna be $3,200 again in a week, right? It's still gonna be way lower next week than it was yesterday. So do what you can with what you've got. That's the point, okay? And congratulations to Tanya, who just took the plunge and invested in Chipotle. I think we're up to like 12 people during this live. Sorry. Hopefully I'm back on Instagram. I have my phone set at do not disturb. I really need to go to the Apple store. And don't none of y'all Android people try to come for me. Because I know every little thing that happened with an Android, y'all always got something to say. I mean, with an Apple, y'all always got something to say. Because I'm team iPhone, period. Right. But for some reason, I have my phone set on do not disturb. And what has happened over on Instagram? For some reason, I have my phone set on do not disturb, and I still get disturbed. Like the phone calls still be coming in. Like every time I'm live, I say do not disturb. And now the Instagram is like blinking and acting funny. It says you're breaking up. Yeah, I don't know. It does that. So whenever somebody calls, it messes up my feed on Instagram. And then either people can hear me or I'm breaking up. Let me know if I'm okay now on Instagram because it's not blinking anymore. Let me know if I'm good. Just please let me know. So irritating. I gotta go to the Apple store about that. No, Lydia, not Team Android. Team iPhone. Team iPhone. But anyway. Karen just bought Chipotle. We had 13 people. 13 people have invested in themselves and their future. Just in this, you know what? I'm just gonna pause for a second. This fulfills me so much. This fulfills me so much because I promise y'all I'm gonna get to the other ways for y'all to find the money in just a second. But I gotta tell y'all this because everything that I do, like, I don't feel fulfilled if I'm not providing value and helping to change people's lives, right? And I've learned that about myself. Like, 3 things I need in my life. I need joy. I need Oh, it says no sound over on YouTube. Oh, that's so irritating. Okay. I mean, not on YouTube, on Instagram. So annoying. Okay, I'm going to go off of Instagram and come back. Okay, hold on, y'all. I will be back. I'm coming back. Hopefully, you can read my lips. I'll be back. All right. Okay. So, let me fix this thing on YouTube, Instagram. That's so annoying that my phone does that. Sue says, "I'm new to this. What can I buy? I'm sorry, I can't see what you said. What can I buy this Chipotle stock?" I don't understand your question, Sue. Are you asking where you can buy it? Let me know. Denisha, I mean, I'm sorry, not Denisha. Oh, Cassandra. Cassandra says, "Look at God, jumped over to YouTube just in time." Yes, girl. Yes, you did. Because Instagram did not, it's not doing me right. Miss Jackie said, "Just try to invest using HSA. As a federal employee, I have to have 1788, 1799 in my account before I can choose an investment. What the hell?" I don't know about that. I don't know about the rules that um they require. Do you have anything in your 401k that you can use? Because it sounds like you don't have 17 $1,800 basically in your HSA. So um I don't know the rules of like the federal government, or maybe your branch of the federal government that you're working for. I don't know what they require for HSA. But for 401k, do you have the money for that? Could not use my 457, doesn't have the choice of CMG, but I did on SoFi. Okay, great. Great, 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 great. Where can you buy the stock, says Sue? Okay, you can buy the stock generally on any brokerage account. Usually on any brokerage account. So you need to open a brokerage account. Let me just go live here. Hold on. Sorry, I gotta do this over on Instagram. This is so annoying. Okay, hold on. Where to find money for stocks? Y'all watching me set this up in real time. This is crazy. Okay. All right, here we go. So any brokerage account, Sue. So you can go to like Grace has mentioned SoFi. SoFi is a brokerage account. You can go to Robinhood. You can go to This is if you're using your own money, not like a 401k, right? So you can use SoFi, Robinhood, Fidelity, TD Ameritrade, Merrill Lynch, Webull, Moomoo. Like there's a ton of different options that you can use. Okay. And so you just open a brokerage account. So if you're brand new, Sue, like I was saying, you can use your 401k or your HSA if you have the money in it. Okay. And you would just go to the investment section. If you don't know where that is, it's different for every like business. So you may have to ask your company, ask your HR, or ask the person who handles your benefits at your company where to find that in your account. And then you can invest. However, if you're investing your own money, which we're going to talk about that in just a minute, your own money that you do not have already in a retirement fund, then you can open up a brokerage account that you can use on your app and you can control, and you don't have to have a minimum amount in and that sort of stuff, right? So that's Robinhood, that's Moomoo, that is SoFi, Webull, even Cash App is an option. Hey, you guys, thank you for coming back over here on Instagram. Cash App is an option. Acorns is an option. There's a lot of different places that you can do. Miss Jackie says, "I'm visiting and can't get my TSP account right now. Can't get to my TSP account right now. But you have given me a good start to try later. I do have Robinhood. Perfect. So I'll try that. Yes, you can definitely use Robinhood. Okay, so let's talk about where to find the the disposable income to invest if we're not using our retirement funds. Leslie is coming in from the UK. What's up, Leslie? Welcome, welcome, welcome. Okay, great. I'm glad that helped you, Sue. All right, so first things first, in order to find the disposable income to be able to invest in stocks like today, you need to understand where your money is going. Okay. Because if you wanted to be able to invest $500 10 years ago and have $1.6 million today, okay, you would have to have the money to be able to do that, right? You have to have the money to invest. And all of you all earlier, I asked, give me a 3 in the comments if you want to invest in the stock market but don't know where you're going to find the money. And a lot of you gave me a 3. That was the number I asked for. And a bunch of you all said, that's me. I want to invest in the stock market, but I don't know where I'm going to find the money to do so. Okay. If you're on Instagram, I definitely suggest that you come over on YouTube because Instagram be tripping sometimes. Like just now, when it kicked me off. And YouTube is popping over here. So if you want to be on the YouTube channel where all the commentary and all that stuff and all the action is, come over to YouTube. The link is just search for the Get Money Show on YouTube and you'll find me. But it's youtube.com/Gwen Jameer. Just search for Get Money Show on YouTube and you'll find me over here. Okay. All right. So even more people are giving me a 3. All right. So the first thing that you need to do is understand. All right. I'll see you over here. He said, on my way to YouTube. The first thing that you want to do is find the money, but you have to have kind of like a budget. And I know people are like, oh, I don't want to have to be beholden to a budget. I do believe in budgets, but I'm not telling you right now, as for the purposes of this video, that you have to create a budget. What I am saying is that you have to understand where your money is going, because you can't understand where you can even find more money if you don't know what you're spending money on in the first place. So the first thing I want you to do, I'm going to give you guys a resource. It's absolutely free. You don't have to pay a dime for it. It's my budget tracker. Okay. And I'm going to put the link in the comments here on YouTube. All right. Let me actually make it clickable. Hold on. GwenJameer.com/budgets. Okay. That's the first thing that you're going to do. Click that. It'll take you straight to my budget tracker. Okay. It's a free. It's no tricks, no gimmicks, no nothing. You just put in your information. It'll send it to you. Okay. It is a comprehensive way for you to really figure out and be honest with yourself about how much money you have that is going out. Okay. Yay. Oh, Aaron said, I used to use my Grubhub delivery money to invest. So smart. So smart. So smart, Aaron. Foodist Bay is here. He made it over here. What's up, London James? He made it over here. Oh, gosh. All right. So click on that link. It's going to take you to the budget tracker. If you got the budget tracker, let me know in the comments. Over on Instagram, I can't put the clickable link in the comments, but if you go to gwenjameer.com/budget, you can get it also. Or you can come over to YouTube and the clickable link is over here. Okay. Let me know if you got the budget tracker in the comments. Let me know if you got the budget tracker in the comments. You're going to want to have this. Okay. When you fill out the budget tracker for yourself, right? You're going to print this out every month or do it digitally. Okay. And it's going to tell you where your money is going. Because quite frankly, most of us don't know. We just pay our bills, right? And we pay our big bills, right? And we pay our small bills too, but we don't factor in the little things like the $20 for Netflix, the $17 for Hulu, the $44 that we pay for Peloton if we had the Peloton app. These little things, right? And then we also don't figure out where we can save money on some of those things. So what I'm not telling you is I hate when I hear people say this, just forego your daily latte. Like, if I want my latte, I'm gonna have my latte. Like, I don't want to reduce my life and the things that bring me joy in order to invest. Like, I feel like I want an and life. I don't want an or life, right? I want to have my cake and eat it too. Because what's the point of having cake if I can't eat it? What's the point? Is it going to sit there? It's ridiculous, right? I want to enjoy my life. So I'm not going to not go get my latte if that's what I want. I don't drink coffee anyway. But if I did, I'm not going to not have my latte. Or they're like, well, just unplug your you know how they say if you unplug your cords every night, they're like, you'll save like $60 a year. What's $60 a year going to do for me? $60 a year? Not even $60 a week or a month, $60 a year. Come on now. When people talk about how to save money, it's always some stupid nonsense to me. Like, save $60 a year by going around your house every single night, making this super inconvenient for you and unplugging every single cord that's in your walls. That's unrealistic. So you can save $60 a year. That's like $5 a month That's not worth it, right? Or foregoing the things that you love, the daily things that you like, right? Let's not do that. Instead, we're gonna use this budget tracker. I see a bunch of you and over here on YouTube have got the budget tracker. So proud of you. What's up? Oh, David's here. Hey, David. He said, good point about budgeting. Jen says, thank you. Just download the budget tracker. Yes, download the budget tracker if you have not done so already. Download the budget tracker if you have not done so already. Okay. Because it will make it really simple for you to be able to figure out where your money is going. Okay. So it's going to give you an option to create a budget. Okay. But for purposes of this, we're just trying to plan out where our money's going. Your cell phone, your car note, your mortgage, your health insurance, your dental insurance, your other sorts of things. Yes, Cassandra, they make it feel like budgeting is supposed to be miserable. They do. But actually, when you use my budget tracker, it becomes really exciting because you're like, I'm gonna tell you, the most exciting thing is figuring out where you can cut without reducing your quality of life. And I'm gonna explain that in just a minute. That's like my favorite thing to do when I'm budgeting. And nobody talks about this. So I'm glad that y'all are here to get this part. Okay. What's up to everybody on Instagram? Still over here on YouTube. If you have not subscribed to the Get Money Show on YouTube, make sure you click that subscribe button and follow me for more of this because we do this every single Wednesday. And every single Monday, I drop a pre-recorded video to help you get to the bag because we all about getting rich with each other because y'all are my rich friends. Y'all my rich friends over here, right? I mean, just in an hour, we had like 15 people who invested in the stock because we're over here talking about it. Amazing. I was saying before YouTube went off, I'm so sorry. I've lost my, y'all. I can start rambling, so I'm sorry. before Instagram started tripping, what I was saying was that this brings me so much joy because Karen was the last person I saw that had bought the stock since I've been live. I've been talking about it because I was saying that in my life, I require fulfillment. I have to have joy. I have to have joy, freedom, and fulfillment. And the way that I feel fulfilled is by adding value to people's lives in ways that change their lives. Right. And so to see you guys who may have been utterly confused and not understanding, oh, Leslie got the tracker in the UK. Yay, Leslie. I'm proud of you. Good for you. Thanks for downloading it. And I can't wait for you to use it and get this information. The way that, like, to see 15 people or more, right, who maybe I may not even say anything, have bought the stock that I was talking about, who possibly just an hour ago was confused about it, didn't understand it, didn't even possibly know that the stock had split. Investing yourselves based upon the information that I've taught you within the past hour. Oh my gosh, like knowing that your life is going to be better, knowing that you have gotten on the track to investing in yourself and growing your money, not just saving it, but actually growing your money passively. That, oh my gosh, like that gives me all the feels. That gives me all the feels. Like, and I'm so grateful that y'all are here and y'all are doing this for yourself. I don't get a dime of your money, right? But the fact that you invested in yourself, and I know that I was a part of that, that is like, that's worth gold to me. That's worth gold and diamonds and platinum and rubies to me. So thank you for filling me up by allowing me to help you make more money in your life. All right, back to the topic. You got the budget tracker. Awesome. If you don't have the budget tracker on YouTube, the link is gwenjameer.com/budget. gwenjameer.com/budget. I cannot put a clickable link in the comments here, but on YouTube, the link is in the comments. gwenjameer.com/budget. Yes, James, he said where you can cut without reducing your quality of life. So if you download this, you'll see that there's a place for you to really put all of your expenses. Okay. And I want you to be really honest with yourself. Really, really honest. Okay. The easiest way for you to be honest is to actually go to your bank account or your credit card statement. I want you to download the last 3 months for every credit card that you have. Okay. And every bank account that you have where you spend money. Okay. Once you do that, I want you to take an average of how much you're spending on food because food and fun are the two things that we never realize how much we're actually spending on. Food and fun. We think that we're spending, a few dollars here and there, but when you add up $10 at McDonald's and $20 at, Starbucks and $30 at Chipotle and $50 here for a night out and da da da. Right. Once you add all those things up, you find you're spending hundreds of dollars possibly thousands of dollars a month on eating out and food. Okay. That's the first thing I want you to do. So remember, my math geniuses, I need you to put your math genius hat on for a second. The way to take an average is to take the number that is like, so let's say you take month one and you add up all your food expenses, all your food expenses. Okay. We're excluding groceries for now. We're just talking about like eating out. Okay. If you didn't cook it, that's eating out. Right. I don't care if it was $2 at McDonald's. I don't care if it was $50 or $100 at a restaurant. Doesn't matter how much it was. We're going to add it all up. And you're going to do that. And then you're going to you're going to add all that up. And then you're going to divide it by the number of entries. So let's say you went out to eat 10 times in the month of June or May, right? Let's say you went out to eat 10 times in the month of May. And you spent, when you add all those things up, let's say you spent $500, right? Total. Let's say then you go to the month of April, okay? And you add all that up. Let's say you spent $300. Now you're at $800, okay? And let's say you go to the month of March and you realize you spent $250. So total, you spent $1,050 on food over the course of the last 3 months, okay? In this hypothetical situation. And then you're going to take that 1,050 and you're going to divide it by 3 because that's 3 months. So on average, you spend $350 a month on eating out. Okay, that's how you do the average. All right. So that's what you're going to do for things that are variable. So even your light bill and gas bill at your house, right? Those tend to be variable costs based upon how much you use. So you're going to do the same thing. Take the average. Now there's other costs that are going to be fixed. So like your mortgage or your rent is generally the same price every single month. Okay. So you don't need to take an average of that because it's going to be the same price. Because even if you add up 3 of those and divide it by 3, you're going to get the same individual monthly price. Right. So you're going to put all that in the budget tracker. And this is going to allow you to see how much you're spending. I want you to add in your Netflix subscription, your gym membership, anything that you spend for your kids. If you got a child like mine, he's in a bunch of different activities. Things tend to go up in the summertime for him because he's in a bunch of camps and all that sort of stuff, right? You're going to put all that stuff in there. Okay. All that stuff in there. And now you have a full picture of how much money you are spending. So the first thing to do to find disposable income to invest, is to now say, okay, what am I spending money on that I'm not using? Okay. We're not getting rid of our quality of life. We're just getting rid of things that we're not using. For example, I own a Peloton. Okay. I tend to be really hardcore into my Peloton at times, and sometimes I'm like not doing it at all. I'm rarely like in between, right? So I'm either using it every day or I'm not using it at all and I'm doing something else. I'm doing some other kind of workout. Leslie says, get a spreadsheet. You can get a spreadsheet. Yes, you can. Okay. The budget tracker makes it a little bit easier because it's categorized for you, right? So that's first thing. And when I look at my Peloton, I'm paying $44 a month for access to the Peloton app, even when I'm not using it. That doesn't make sense, right? So why not, if I'm not using it at that particular time, why not just cut off the membership and turn it back on when I'm ready to use it again, right? Because I know my habits and you know your habits. So if you know you're like me, right, and you are using this thing for 3 months hardcore, and then you don't use it for 4 months, then you're paying 4 months of an app that you're not using at all, right? Let's turn that off and then turn it back on when we get ready to use it, right? So let's do the math here. So 44, in my case, let's say 44 times 4 months is $176. So it's $176 that I'm giving to Peloton to not use their app. I know you have stuff like that. I know you have something that you just have on a subscription that they just charge you every single month and you don't use it all the time. Let me know if you have that. Because every one of us, maybe it's a gym membership, right? Maybe you go to the gym real hardcore and then you stop. but you're still paying that gym membership so that you have access to it that you're not even going to. Like, let's be honest with ourselves, right? Let me know if you have something like that in your life. That's the first thing that how we're going to find money. So that's $176 that I would have given to Peloton that I could use to invest in myself, right? Because right now, if I'm spending $44 a month over the course of 4 months, I'm just throwing it away. But I could be taking that 176, I could be spending it on investing, right? Y'all following me? Y'all quiet. Let me know if y'all following me. I want to make sure y'all following me, okay? Um, Here's where I get really, really excited. I want you to take a look at your actually let me pull up the budget tracker because I want to make sure I'm following along with y'all. Okay, so I have it up. All right, so you can see there's a monthly overview. Let me see if I can share my screen. I've never shared a screen before on YouTube, but let's see if we can do it. Okay. Can y'all see my screen? Let me know if you can see my screen on YouTube. Let me know if you can see my screen. I've never done this before. Okay. Cassandra says yes. Okay, great. All right. So over here, you can see you have a monthly overview of the budget tracker. So this is basically like January through December, right? So this is your big goals. Let's say you're like, okay, I know that Avgo, which is a stock we talked about last week, is going to split in July. You may put down here Avgo stock split in the July box because you're like forecasting yourself that you want to make sure that you have enough money to invest in that. Okay. So let's go down to the monthlies. All right. So your financial goals for month 1, month 6 months, and then 1 year, and then 5 years. Okay. These are all long-term things. Now we get to the monthly savings and debt tracker. So this is how much you're going to be saving, how much you're going to be, how much you have to pay in debt. We're not focused on that today. We'll talk about that when we do the 5-day Fix My Finances challenge. Here's where we're focusing on today. So we're focusing on page 6. Okay. Page 6 is this is the month of June. So you say, here's your income source 1. Let's say you have a job and this is your income source. Income source 2 is, say you have a side hustle. If you get child support or alimony, if you have a side hustle, other income, your total net income is going to go down here. Okay. Now, when it comes to household expenses, you're going to put every single thing. You're going to put your rent and your mortgage, your property taxes, if you have those, and condo fees if you have those, gas and electricity. So these are all the household expenses that you have to pay. These are generally the things that you can't really get rid of. These are what you need to survive. Okay? This is what you need to survive. Sharon said, yes, she just stopped 2 accounts. I love it. Look at this. She just stopped 2 accounts that she's not using. Right? Because we all have stuff like that. Right? Okay. All right, these are all the things that you need to basically live, but we can still cut some of these and have our same quality of life. I'll tell you how in just a minute. Okay. Now let's talk about personal stuff. This is where things get a little bit more variable or not always required. So there's nice to haves and there's must haves. Must haves are generally going to be the things over here in this section of household expenses, right? You got to pay your cell phone bill. You got to pay. We don't have to pay for streaming, but you probably will. You need to have please go to the dentist, right? So you need to have your dental insurance. Public transportation, if you take the bus or you take a train or anything like that. These are things you need to have in order to like get around and do what you need to do in life. Okay. Personal expenses are not always as required. So gas, you need gas for your car for sure, but food, right? So like I just told you guys, you're going to figure out. So in this case, this is groceries. And then we have restaurant eating out as a separate category. So your restaurants and eating out, you're going to do exactly just what I told you. So you're going to take the average of how much you spend, whether it's a fancy restaurant, whether it's a mid-grade restaurant, or if it's fast food or something really cheap. Even if it's $2, $3, you're going to add that in. You're going to take the average and you're going to figure out how much you're spending on average over 3 months. But you can take this just for 1 month and you can say, okay, I spent on average $350 a month on eating out. Salon and beauty. Right? I get my nails done, I do my own hair, I get my toes done, like I get facials, like I'm a girly girl, right? So I'm spending a decent amount of money on salon and beauty, right? You might be too, you might not be. If you have a child and you go out, maybe you have a babysitter, or if you've got a little bit more money, maybe you have a um a nanny, right? So this is how much you would be spending on that. Food. This case is for groceries. So we're going to do the same thing for the grocery side. We're going to take the average of how much we're spending on groceries and we're going to divide it by 3, right? So that's how much we're spending on food. Gas, same thing, gas for your car. Unless you have an electric vehicle, you got to put gas in your car. And these are other expenses. There's several lines here for you to add other things into. All right. Of course, we want to make sure our credit stays good. So for debt repayment, it's very important that you add in loan payments, credit card payments, other debt payments. If you owe a friend, please pay your friend back. I got a friend, 2 friends actually who owe me money right now. They ain't pay me back. Pay your friends, okay? Pay your friends. Put that in here, okay? All these are expenses that you have. And now once you have all of that, now, again, for the purposes of this particular video, we're not talking about the rest of this stuff, this weekly spending and all that sort of stuff. We'll talk about that during the 5-day Fix My Finances Challenge, which will happen in July, which you're going to want to make sure that you are a member, not member. You're going to want to make sure you're a member of my group on Facebook for that. I'm going to put the link in the comments for you to get to that. But that's happening in July. But for this purposes, Get Money Crew. For today's purposes, we are only focused on these things. Okay. Is my screen moving up and down as I'm talking about this with you guys? Let me see. Okay, yeah, it's moving up and down. I have to go to two separate screens in order to see you guys and your comments and then to see the thing I'm talking about. Okay. Make sure that you are subscribed to this channel, by the way. If you're new here and you never subscribe to the Get Money Show. Okay. All right. So now that we have all of our expenses laid out, this is the only way you're going to be able to see all that you're spending. Okay. This is very, very, very important. Now that you have all of this written out, you're then going to go, and again, you're going to see what you can get rid of. So can you get rid of, like Sharon just did, got rid of 2 accounts that she's actually not using. And the thing is, I'm not telling you to get rid of it forever. Don't get rid of it forever. Just get rid of it while you're not using it. There's no point in you wasting money when you could be spending that money on yourself and investing in stocks for yourself, right? So again, if like me, you got a Peloton app or any service that you use, right? There's another one I was using, Shipt. So Shipt is like a grocery delivery company, right? But I was finding that I was actually going to the grocery store more, but yet I'm still paying them, to deliver I'm paying them the monthly fee to have access to the service. Why am I doing that if I'm going to the grocery store? A lot of these things are out of sight, out of mind, and we don't always realize or remember that we're paying for certain things. I know you have to have expenses that you have just forgotten about, right? So the way to see that is to go to your statements, your credit card statements and your checking account statements, and see what you're spending money on, so that way you can be honest with yourself. Okay. So I had to get rid of the Shipt grocery service because I'm paying a fee when I'm actually doing the work. That doesn't make sense. We forget about these things sometimes. There's no shame in it. All of us do it, right? We forget that we have these expenses. So cut these expenses when you look at your statement. You're like, oh, I'm still paying on that. Let me get rid of that. Okay. That's the first thing. That's the first block of money that you're going to have to invest. So let's say you do all that and you end up realizing that in a month, you're generally spending $100 on services that you are no longer using. That's $100 that you now have to be able to, of now disposable income that you have to be able to invest in stocks. Does that make sense? Okay. Now here's where the fun comes in. If that makes sense, let me know in the comments. Here's where the fun comes in. You're going to take a look at all of your expenses, particularly those in the in this section here, this household expenses section, okay? And you're going to say, what can I cut? Or not, let me rephrase that. What can I reduce but maintain my quality of life? And this was so fun for me, okay? Because here, again, we're not here to get rid of the lattes. We're not here to get rid of life insurance. We're not here to get rid of health insurance. Like, we're not here to get rid of those things, but we want to make sure that we're able to maintain them and have the same level of service, but at a reduced price. Y'all gonna be so excited about this when y'all do this. I promise you, you're gonna be really excited about it. So I'll give you some examples of mine. So one thing that I did is that I had health insurance, right? Now, mind you, I'm an entrepreneur. I don't have health insurance through my job. My job is my company. So that means my company pays my health insurance, but technically I'm still paying my health insurance because it's my company. Got that? Unlike some of you who may have like a 9 to 5 and you work for someone else, they're paying for some of your health insurance, right? In my case, I'm paying for it all regardless because it's my company. Okay. We were paying through the company $874 a month for me and my 13-year-old son to have medical coverage with the doctors that I wanted us to have access to. Because remember, not all health insurance companies, not all health insurance plans give you access to the doctors that you want, right? But it was very important to me that we still had the same, he still had the same doctor, I still had the same doctor, I still had access to my same therapist, all of that, right? I didn't want to get rid of that. So, in order to maintain the same level of service, which is to basically still have my same dentist, my same primary care doctor, my son has had his same doctor, my same therapist, I started to look around to find where can I, how can, like $874 a month is crazy, right? For two people who don't even go to the doctor. Like me and him are generally very healthy. So like for us not to go to the doctor, we're only paying $1,000 a month in health insurance, which is ridiculous. So I started looking around and I found a company called Xander Insurance. I'm gonna put it in the comments. Xander Insurance. Okay. Xander is not just an insurance company. They do a lot of other stuff, but they actually recommend it through Dave Ramsey or by Dave Ramsey. Okay. Dave Ramsey recommends them. That's how I found them. Xander shopped around and found me another health plan, which was the exact same company. So Blue Cross Blue Shield. It's very important to me that I don't want to do like a local insurance plan. I like to have a national insurance plan because I travel a lot and I don't want to be in, California have a medical emergency and like there's all this red tape because my company was only local, right? So a Blue Cross Blue Shield, very well known, very well respected healthcare company. Still had Blue Cross Blue Shield before. I got Blue Cross Blue Shield now. Okay. I have the same doctor. I have the same therapist. My son has the same doctor, and we both have the same dentist. So nothing changed except the price. My price now for our health insurance for the same stuff, same doctors, is now $241.30 a month. So I went from paying, I got this written down here. I went from paying $874 a month to $241 a month for the same thing. That saved me $600 some dollars a month. Over the course of a year, that's $7,596 a month that I saved just by going with Xander to shop for my health insurance. Do you know how many stocks I can invest in with $7,596? Like that just gets me excited. I don't know about y'all, but that gets me like super excited to know I'm not changing anything except the price because I went from offering it. Well, we still offer it at the company. I just don't use it. Other people in my company they still have life insurance. They can do what they want to do. We offer as an option, right? They can go outside of it if they want to, just like I do. But it was more expensive because I am the owner, right? It was more expensive for me to pay through the company than it was for me to get it separately. And since I have had this health insurance, I've definitely gone to the doctor. I've definitely seen my therapist. My son has definitely gone to the doctor, and we both have gone to the dentist, and nothing has changed. Karen says she has Xander ID theft recommended by Ramsey Solutions. Yes, I have Xander ID theft as well. Yes, Xander's great. Xander's a great company. I don't get like any kickback for you guys, checking out Xander, but it's a company that I used to price shop my health insurance. Okay. And by the way, my deductible didn't go up dramatically. I think my deductible did go up, but it went up by like $200 a year. So $200 more a year, I saved 75, almost $7,600 a year. Like the math just makes sense, right? So that's one way that's one place where I kept my same quality of life, but I reduced my expense. Okay. Another one was my cell phone bill. That is a huge difference, Lydia. I know, right? So another place was my cell phone bill. So I pay for my cell phone bill, my son's cell phone bill, and my dad's cell phone bill. Okay. So for 3 people, we were with T-Mobile. I like T-Mobile, right? I don't know what plan y'all got, but I like T-Mobile. And I was paying $185 a month for the 3 lines for unlimited everything. Okay. Family plan, all that sort of stuff. Mint Mobile, I learned, is on the T-Mobile network. And T-Mobile owns Mint. However, the price is cheaper. So, excuse me, I went from paying $185 a month for 3 lines to now paying $130 a month for 3 lines. I have the exact same level of service. I'm on T-Mobile's network anyway, and T-Mobile owns Mint. So I'm literally still getting T-Mobile. I just don't pay T-Mobile. I pay Mint, which is owned by T-Mobile, right? So now I'm saving like $55 a month on cell phone service. And if we multiply that over the course of, let's do the math, 55 times 12, I save $660 a year on cell phone service, but it's exact same service. I've had this since March, and not once have I had a drop call. Now, I went to Mexico and I went to Puerto Rico with Mint, didn't have no issues. I have the same service that I had when I had T-Mobile. It's just cheaper, right? Cassandra says, I need to find a side hustle for AT&T's ass. Listen, maybe not, right? If you like AT&T, let's go to Google and let's see, is there a company that is like a lesser price but owned by or at least maybe not even owned by T-Mobile, but on the T-Mobile net. I'm not saying T-Mobile. Either on the AT&T network or is owned by AT&T. That's cheaper. Right? So maybe you don't need to find a side hustle, right? Because we're not trying to reduce our quality of life, Cassandra, right? We're trying to just reduce the costs. That's all we're trying to do. Like, we're not trying to have to work extra hard, right? But this is like almost extra passive income that you get just by making a phone call and switching to certain things. Okay. Mr. Porter says, yes, facts. Mint Mobile is great. Yes, it is. Mint Mobile is fantastic. I love Mint Mobile, right? I haven't had 0 problems. My dad is 83. He don't really know how to text all like that. He's not, it needs to be simple, right? So the fact that I was able to move over and keep his same level of service without him having to wonder, why is my phone calls dropping and why I can't do such and such, it was seamless, right? So, but I was only able to understand where I was spending money and what I could cut when I had these things listed in these household expenses that we have on this category. We have over here on YouTube that I'm showing you guys, okay? The next thing is streaming services. This is a big one, okay? Streaming services. I want y'all to tell me in the comments how many streaming services you have right now. Let's see what there are. We've got Paramount Plus, we've got Netflix, we've got Hulu, we've got who else? Apple TV, there's Peacock, there's Disney Plus. What else? That's 6 off the top of my head that you can have access to. How many streaming services do you have right now? Lydia says, is it Mint Mobile? I'm with T-Mobile too. No, it's Mint, M-I-N-T. Mint Mobile. I'll put it in the comment. Mint Mobile. Mr. Porter says he had, yes, Prime, Amazon Prime TV is another one. And I'm also going to include YouTube Premium. Okay. So why Rennie says Prime, Mr. Porter says Netflix. Lynette says she only has Netflix, right? Why Rennie says she has 4 streaming services. Okay, 4 streaming services. Violet says none. She don't watch TV. She don't watch TV at all. Cassandra has 5 streaming services. Algo says Prime and Kev on Stage. I didn't even know Kev on Stage had a streaming service. Oh, did I? Maybe I did know that. Is it paid? Is it free or you got to pay for it? You probably got to pay for it for Kev on Stage. Okay, because Cassandra says it's crazy. She says crazy. I have 5 apps. Yes. Okay. Karen says she has 4. Okay. This is on YouTube, on Instagram. Algo has 2, while Rennie has 4. Mr. Porter has 1. Okay. So now I want you to be honest with yourself. How many of those are you watching regularly? Not just when Aaron says he has Fire Stick. All right. Not just when the show is on. How many of those are you watching? I'm gonna say on a weekly basis. So for example, when I say that, what I mean is that um I like BMF, the show BMF, but I have to have stars to watch. It's not stars, not BMF. I'm sorry. Is it BMF? Is BMF on stars? I can't remember what BMF is on, but let's say it's on stars. I think it is on stars. So I have to have stars in order to watch BMF, right? But BMF is only on for how many weeks? 8, 10 weeks, something like that. Why am I still I don't watch nothing else on stars. Why am I still watching stars or paying for stars when the show's not on? If the show is on for 10 weeks, let's say hypothetically for 10 episodes, there's 52 weeks in a year. Why am I paying for an extra 42 weeks when I'm not even watching it? But most of us do that. We just turn it on and they charge us because they gonna charge us, right? And we just leave it on. And then when the show comes back on, then we have access to it. I can turn off stars for 42 weeks and only pay for it for those 10. Let's say stars cost me, I don't know, $20 a month. I don't know how much it costs. Let's say it's $25 a month. And that's let's say 42 weeks on average, 4 weeks in a year, 4 weeks in a month. That's like 10 months. 10 months and some change, right? So 10 months times $25, that's $250 that I'm paying for stars that I don't even use. Right? Turn that ish off when you're not watching the thing that you have access to it for. When I had Apple TV, I was watching a show called The Morning Show. Right? It had like Steve Carell and Reese Witherspoon in it. And it's only on for 8 to 10 weeks. Turn that ish off when you're not paying for it. So if you multiply that over, let's say Sharon has 4 streaming services. And let's say over those 4 streaming services, Sharon, let's say that you're only watching them like when things are on, right? It was a good show, Karen. The morning show was a good show, right? So let's say you're only watching it during those times. Well, if you're paying $25 for 10 months of a show that you're not watching, right? And that's $250 each. Now you didn't spend $1,000 on streaming services in a year that you're not even watching. Crazy. But we don't realize that we're spending all this money because they just charge us and we just keep it moving, right? For streaming service is a big one. So like I said, food and fun. So fun includes entertainment, right? Food and fun are the 2 categories that most people are overspending on and don't realize it. That's why I really, really want you to spend some time to figure out the average of the cost that you have. So some people don't have any streaming services. That's amazing. Congratulations. For those of you who do, I really want you to assess what you are spending money on. So I can tell you at one time we had Disney Plus because my son was little at the time. We had Disney Plus, we had Netflix, we had Hulu, we had Peacock. I had Stars because I was watching one of 50 Cent shows on Stars. So I had like 5 or 6 different streaming services. And I can assure you, my son wasn't even watching Disney Plus. So I had to get rid of that because that didn't make sense to pay for. And I was also spending money on Peacock, Apple TV, and all these other things. And when I was really only watching Netflix and Hulu. So if I'm watching Netflix and Hulu on a regular basis, let's keep those 2 going and the other ones cut those off. So that's another way that you find disposable income. So the point is that a lot of things that we feel like we don't have a lot of money to invest in the stock market, right? But if we just take a look at where we're spending and we can find ways to, again, reduce our costs, but not reduce our cost of, reduce our quality of living, now we're talking. So if we're just talking about me, myself as this example, and we're talking about these household expenses that we have in the spreadsheet here that I'm showing you guys, right? Then I've reduced my healthcare by almost $7,600 a year, right? I've reduced my what do you call it? my cell phone service by $660 a year. Okay. If I talk about my streaming services, I've reduced those by at least $500 a year by not turning on things that I'm not using or by getting rid of things I'm not using. My Peloton app, when I'm not using that, that's $250 a year that I'm not, that I can save. So let's add all that up. If we add this up, that's $7,600 plus 660 plus 500 plus 250. That is $9,000. $9,000 that I saved, but did not change my quality of life at all, which is crazy, right? $9,000 because over the course of a year, we don't normally multiply things over the course of a year. We're just like, oh, but that's $50 here, it's $25 here, that's $200 here. It's not a lot. It is a lot when you realize that over the course of a year, that's how much money I saved. And the bulk of it was my health insurance. The bulk of it was health insurance that I did not change a single doctor. I still have the same exact health insurance company, right? So I want you all to do the same thing because I saved $9,000. So boom, now that's $9,000 that I now have extra that I can invest into myself instead of throwing it away. Does that make sense, you guys? Sharon says she's getting ready to let 2 things go. Yes, girl, let them things go. Here y'all go. Y'all already, since we've been on, we got like 20 people or so, because 5 more people have said over here on Instagram that they invested in Chipotle since I've been online, right? I'm so excited about this, y'all. So, what's up, Johnny? So, 20 people have invested in themselves, and now you guys are reducing costs so you can find more money to invest in yourself. Like, this is life-changing. This is a life-changing 2 hours that we've been on. Not even 2 hours yet. Hour and 40 minutes. This is life-changing for you, okay? Let these things go. Now, the thing is, this is going to take a little bit of work on the front end, but you only have to do this once. Once you do this, you're set. Let's also talk about your car, right? Now, I realize cars are a little bit more expensive to try and like get rid of or whatever, especially if you only have one car. But in my case, I will tell you, I had a BMW convertible and I also had a Camry, right? I told you all, like, I am just like you, right? I know I own a business and I talk about money, but I like nice things like most people do, right? So I had a BMW convertible. The average car note in America for a new car is $700 a month. I'm gonna close this not stream. I'm gonna stop sharing for a minute, okay? The average new car cost in America is $700 a month. The average used car cost monthly is $500 a month. Okay. But we all know that cars are liabilities. We all know that the moment you drive the car off the lot, it reduces the value of the car, whether it's used or not used. We all know this, right? If we know this, give me a 5 in the comment or 4 in the comments. If we know this, that cars lose value, they do not appreciate unless it's like a historical vehicle. We know that. Give me a 4 in the comments, okay? So by the time that we go to sell the car, it's usually going to sell for less than we bought it for. It's not like a house that appreciates in value, right? So me having this BMW convertible was really nice. It was super cute. I loved it. Oh my gosh, it was everything, right? It was everything. It was beautiful. But I was actually paying $986 a month as a car note. Well over and above the average, because it's a luxury car, right? Well over and above the average of a new car. And this wasn't even a new car. This was a used BMW. It was only like 2 years old, but still, right? It's a luxury car, so it costs more. $986 a month. Meanwhile, I had and still have a paid off Camry, right? I could continue to pay $986 a month for this. You got to also understand it's a BMW, it's a luxury car, and it was a convertible, right? So convertibles tend to cost more. It was a hardtop convertible, which costs even more than the soft top convertible, all that sort of stuff, right? So that made the cost far more than the average used car, right? Or a new car, or new or used car, right? Okay. I could continue to pay $986 a month, which is $11,832 a year for this car note, which is going to reduce it's not a historical car, so it's going to reduce in value, right? Or I can take my $11,000, almost $12,000 a year, and I can put it into my stocks, which are going to appreciate in value, right? A lot of us, we want the outward appearances of wealth without actually having wealth, right? Like we want people to think we got it going on. We ain't really got it going on, right? We want people to think that we stunting. We want to stunt for the gram. We want to stunt for people, but our bank accounts are not showing the same thing, right? And so for me, it was like, well, I already have a paid off car. I don't need this convertible. I like it a lot. I really, 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 really like it, but I don't need it. And if I'm on a path, right? So back to the budget tracker that I showed you guys. If you remember, there's the month one, this month, the 12-month snapshot, and then there's also the 1 year, 6 month, I'm sorry, 1 month, 6 month, 5 year, 1 year, and 5 year goals. Those are the long-term goals, right? If I look at that, this is why the budget tracker is so important, why you should get it if you don't have it. Because if I can look at that budget tracker and I can say, in 5 years, this is where I want to be, right? In 5 years is going to fly by, fly. The days are long, but the years are short. If you're a woman or a man of a certain age, you know what I'm saying is true. Them years be flying, right? I promise you, I feel like 3 years ago, I was 25. How did I get here so quickly, right? I'm far over than 25, right? So if I look at that 5 year goal and I say, I want to have this much in my bank account, I want to have this much as my net worth in 5 years. Does what I'm doing today align with what I say I want? Because it's real good to say what you want, but you got to put the things into practice to make it actually happen. So me paying $11,832 a year for a car that's going to depreciate in value in 5 years, or I could let's say I took that same $11,000 and I put it, let's do some math. Let's say I took the same, I'm not going to do this, but let's say I took the same $11,000, almost $12,000. Let's say I put it in Chipotle, right? Let's do some fun math, okay? Let's say instead of $500, let's say I had put that in Chipotle when it was $50. Let's do $12,000. And remember, when it's split, like we talked about earlier, when the stock split, it's split into 32, right? So my stock is worth $12,000, but instead of, let's say for $12,000 at $50 a share, I could have bought 240 shares. So if I bought 240 shares before the stock split, okay, and the stock split today, 50-1. So we're going to multiply 240 times 50. That means now today I will own 12,000 stocks. I will own 12,000 stocks today when I invested 12,000. If I invested $12,000 whenever it was $50, right? And let's say the stock runs back up to $3,200, like it was just yesterday. For 12,000 stocks times, this is kind of stuff that make you mad at yourself, right? Because if I had invested $12,000, the same $12,000 that I was spending on a car note, the same 12, not any extra money, not money that I had to go earn extra in addition to whatever I already was doing, just money I was already spending. Money I was already spending. This is what I'm talking about for y'all. This is why you have to go through this and reduce your costs to not get rid of your quality of life, but reduce your costs. If I had spent $12,000, the same $12,000 I spent on the car, and I bought Chipotle when it was $50 at $12,000, and it ran up to $3,200 like it was just yesterday, today I would have $38,400,000 right now. Y'all would never see me again. I mean, y'all might, because I like doing this. $38 million? What? What? The time to get into the stock market, the best time was yesterday. But the second best time is today. You have to find the money. It's like, this is one of those examples of, you know how you say like I can't afford to do something? Can you not afford to do this? Could I not could and we're using me as an example. I'm completely comfortable with being transparent, right? Because if you have never made a single mistake with your money in your life, I want you to give me a 5 in the comments. If you've never made a mistake with your money, if you've never spent money that you shouldn't have spent, I want you to give me a 5. And I bet you not a single one of you can honestly say that, right? So I feel like a lot of these like finance gurus and people talk about money, they act like they have it all figured out, that they've never done anything, frivolous, that they've only made smart financial decisions their whole life, their whole adult life. And that's just not reality, right? So I love that I'm able to use me as an example of this, because this just goes to show that people who are good with money also F up too, right? So I could have had $38,400,000 today had I invested that same $12,000 in Chipotle when it was $50 less than 10 years ago. Baby, get the budget tracker, okay? Get the budget tracker, download it, write out your 1 year, your 1 month, your 6 month, your 1 year, and your 5 year goal. Because had I thought about that at the time, I would have said, my 5 year goal is to have, let's say 2 million, let's say $5 million in the bank. Liquid, like liquid money, money I can grab right now, not retirement money, all that sort of stuff, just money in the bank, right? If I knew that 5 years ago, I wouldn't have taken, or if I thought about that 5 years ago, I wouldn't have taken on, and I would have run these numbers, I would not have taken on a $12,000 a year car note. Just so I can put the top down and feel cool as I drive around. Don't get me wrong, I love the car. I loved this car. And when I sold the car, my son was not happy with me. I can assure you that he was not happy. But he also got to pay the note, right? So, his opinion doesn't really matter in this case. Unless you contribute into the fund, sir, then you really have no say so, okay? But I had a paid off Camry, and I still got a paid off Camry. So I drive my paid off Camry. You know what Warren Buffett drives? Warren Buffett drives like a Honda. Warren Buffett got the money to buy whatever kind of car Warren Buffett wants. And I'm not saying, here's the thing, I'm not saying that you should not buy a drop top BMW if you want one. What I'm saying is that you should only be making purchases that are aligned with your goals. So if my goal, let's say, was to have $5 million in the bank 5 years from the time I made the plan, and I did not yet have $5 million in the bank at that time, then I should not be doing that. I should do it once I've reached my goal, right? So let's say in 5 years from that time, I had $5 million in the bank. Then I can say, okay, now I can go off and now I can go, because 5 years is not a lot, right? I can go off now and I can buy 2 drop top BMWs if I want to, right? We're not here to not live life and not love life, right? We're not here to only be frugal and like not go on vacations and trips and do things that we want to do, but we are here to make sure that our goals align with what we say, that make sure that our habits align with our goals. So there's no bank account that you can put your money in 5 years from or 10 years ago that's going to get you $38 million in 10 years. There's not a single one. Not one. Which is why I keep telling you all, you cannot save your way to wealth. You have to invest. And when I say wealth Wealth is different than being rich. Being rich, you can lose that. Being wealthy is being independently wealthy is a whole different ballgame. And that's what we're going for. Okay. Karen says, yes, we can find the money if we really want to. Yes, you can. But an easy way to find the money is just to go through what you already spend money on, reducing those costs, not getting rid of them, keeping your same quality of life, but just changing the cost of them. And this is really easy and fun. I'm gonna give you one more example of where I save some money. So I have a personal trainer, okay? And the trainer, I was seeing her 3 days a week. I love her. Like she's like the best, right? 3 days a week I was seeing her. And I said, okay, if I only saw her 2 days a week, I would actually save like $400 a month. So I went to seeing her 2 times a week. And you may say, well, Gwen, that's reducing your quality of life because you're not seeing the trainer 3 times a week. That's not true, right? I'm still at the gym 5 days a week, 4 to 5 days a week, right? But she actually utilizes an app. And that app has all the workouts that we're going to do together anyway, right? So when we're actually together on our 2 or 3 days a week, we're running through the exercises on the app. And the reason she uses the app is like in case she gets sick or let's say I'm not in town, I can still keep up with the workouts in either one of our absences, right? And so she's using this app anyway. So but I like working out with her because she kind of like pushes me to like do more weight or more reps or whatever, right? So instead of seeing her 3 times a week, I go see her 2 times a week and I use the app on that third day. Because the app is there anyway. We're gonna do the same workout. Like I already know what the workout gonna be. And it's good for me because I don't want to be dependent upon the trainer. You know, some people they only go to the gym if they work out with the trainer, but the trainer's not available, then they're not there. I don't want that to be me, right? So I go see her twice a week. I save $400 a month. I still have the same workouts. I still do the same workouts because I have access to the app, right? But I save $400 a month by just reducing one day. How much is that in a year? In a year, I save $4,800. Don't tell me you don't have the money. Don't tell me you don't have the money to invest. You just haven't gone through your expenses and figured out where you can cut. Because I'm still having the same trainer, the same exercises, the same workouts. I'm still doing the same things at the same times on the same days. It's just I see her twice instead of 3 times, right? $4,800 a month. So if we add in the $4,800 a month that I didn't mention before, on top of the $9,000, now we are at that's 8 carry the 1. We're at $13,800 a year that I said we didn't even count that car. We didn't even count the car note that we was talking about, right? $13,800 in a year's time that I saved just by going through things that I already spend money on. And I found ways to reduce the cost without changing the quality of my life. Does that make sense, you guys? Let me know. Let me know in the comments if that makes sense. Because again, I'm not one to tell you to not do certain things or not buy certain things, but I want you to do it at a cost that's the least expensive that you can pay, but still maintain that same thing. Okay. Lydia says, I drive my paid off Genesis 2012 and it still looks and drives good and is a luxury car. So I'm good. Perfect. Who gonna check you? Who gonna check you, Lydia? Who gonna even know? Like, who cares? It's paid off. It's paid off. It's a luxury car. You're doing a doggone thing. Super proud of you. Super proud of you. Okay. Yes, Karen, that is crazy cash. $38 million. Y'all, I can't even fathom that I could have had $38 million today. Isn't that crazy? Thank you for your comments, Leslie. I appreciate you over on Instagram. That's crazy. What if you have no money left over, says Eddie. So, Eddie, in order to not, do you mean after reducing your costs or currently? Hey, Yolanda, I'm so glad that you're here. Yes, you finally got on live. What do you mean if you have no money left over? I'm guessing that you mean if you have no money left over, like currently. Yeah, currently. Okay, Eddie. So if you have no money left over currently, you're going to do what I just mentioned. You're going to download that budget tracker. Did you download the budget tracker? If you didn't, I'll put the link in the chat again for you. Um, QuenJamir.com/budget. Okay. You're going to download this budget tracker. And why didn't it hyperlink? Did it hyperlink? It didn't hyperlink. I don't know. Let me redo it. QuenJamir.com/budget. Okay. There we go. All right. So you're going to download that budget tracker. Okay, Eddie. And then you're going to fill it out. Right. And we particularly, I don't know when you came in, Eddie. So I don't know if you came in after I already went through it or if you came in beforehand. But you're going to go to page 12 for the purposes of this video. Okay. You're going to go to page 12. You can fill out the rest of it for sure. We'll actually go through that. Okay. You came in after. Okay, great. So I'll run back through it for everybody who was new. You're going to fill out the whole thing, but we're going to run through all of that in the Fix My Finances Challenge, which is going to take place in like July or August. I'll make an announcement to let you guys know when it's going to happen. Okay. You have to be in the Facebook group to have access to that. All right. But the videos will live here on YouTube and they'll be private. So you have to you have to be in the group and following me here on YouTube. So if you're not following on YouTube, if you're not subscribed, you're going to want to make sure you hit the subscribe button. Hit the subscribe button here on YouTube so that you have access to that. Okay. And if you're not in the group, I'll drop the link for the group in a minute. You're going to fill out all that information, but you're going to focus for the purpose of what we're talking about, Eddie. You're going to focus on page 12. Page 12 is the page where you list out all of your expenses. So you're going to go through all of your expenses and you're going to fill that out and be honest with yourself. Okay. It's going to ask you for your, your household expenses, such as your rent or your mortgage, your car note, your streaming services, your life insurance, health insurance, dental insurance, anything that you need to like live in a house, basically your cell phone bill, you need things you need for survival, basically. Then there's other expenses called personal expenses. And in that category, you're going to put down things like maybe hair and nails or gas for your car or, other things that you just need for your lifestyle, right? The lifestyle stuff is generally nice to haves. The household stuff is generally must haves. But either one of those, we can find ways to reduce them. So as I was mentioning to everyone, you basically go through and you see what you can cut. So an example that I provided was Mint Mobile is the cell phone company I switched to from T-Mobile. T-Mobile owns Mint Mobile, which is the same company that I'm with now, but the cost is like $50 less per month, $55 less per month. So I was paying $180 for 3 lines, me, my son, and my dad, okay, with T-Mobile. When I switched over to Mint Mobile, I continue to have the same level of service because Mint Mobile is on the T-Mobile network. Okay. Mint Mobile is owned by T-Mobile, but the price is $55 less per month. So over the course of a year, I saved $660. So Eddie, to your question, what if you have no money left over? Let's say I was completely spent with all my expenses. Just by reducing that cost, I maintained the same level of service because I'm still on the T-Mobile network, right? My service is pretty much the same. I just pay a different company. I now have access to $660 a year that I may not have already had access to, right? So if we go through all of our expenses and we find these same sorts of things, a big one that I mentioned, Eddie, was health insurance. So prior to maybe 8 months ago, I was paying almost $900 a month for health insurance for just me and my son, which was ridiculous because we don't even go to the doctor. We're pretty healthy people. We have a doctor, we have dentists, we have, I have a therapist, and I didn't want to keep paying $900 a month. So I looked for a company named Zander, Zander, and Zander price shopped health insurance for me. When they did that, I ended up with the same doctor. My son has the same doctor. We have the same dentist. I have the same therapist, and we're on the same company. We still have Blue Cross Blue Shield. But now I pay $241 a month, okay, as opposed to almost $900 a month. So in a year, I saved almost $7,600 just in health insurance costs. So again, same level of service, didn't change a thing, okay, except the cost of it by price shopping around. Okay, so that's how you find money Eddie. That's how you, when you say, well, if you don't currently have any money, that's where you find the money. Because you're not like, a lot of times people say, well, you need to go get a side hustle. But not all of us have the wherewithal to do a side hustle. Not all of us have the time to do a side hustle. Not all of us have the desire to do a side hustle, right? And I also don't believe in like cutting major things that we like in our lives. So how can we reduce what we already have that will give us that extra income? Okay, Eddie, you're on Medicare, so your insurance, you don't have to worry about health insurance. But that's me, right? If you fill out that spreadsheet or that tracker I provided to you, that link, you put down all of your expenses and you'll find other places that you can cut. So maybe it's not healthcare. Maybe yours is your cell phone. Maybe yours is selling your car if you have a car note and getting a different car with a cheaper car note, right? Like, I don't believe that you need to be driving around in a bucket, like, or something that's like, a terrible looking car. You can get a really nice looking car for cheaper, as an example. That may not be your situation or somebody who's watching, but whatever your situation is, I can 100% guarantee you there are expenses that you are paying right now that you could get for cheaper. Okay. There are definitely expenses that you are paying right now that you could get for cheaper without changing the quality of your life. That is the key. We're not here to be the fun police. We're not here to get rid of things that bring us joy or things that that we need in our lives. I'm not telling you to get rid of your life insurance. You definitely need life insurance. So I would never say get rid of your life insurance so you can save some money every month. No. But can you get it at a lower rate? But still maintain the same amount of death benefit payout, right? Can you do that? Maybe you have New York Life and maybe you're like, oh, well, they're kind of expensive. So maybe I'll go with a different company. Who knows, right? Where can you not cut, just change? We're looking to replace costs rather than get rid of costs. Does that make sense? All right. So in my case, I have before I went through all of this, the same exercise I'm telling you guys to do, I found $13,800 that I could invest that I'm already spending. This is not new money, y'all. This is not new money that I'm coming up with. This is not money that I have to find. This is not money I have to work extra for. This is money I'm already spending and giving to somebody else. Okay. I could take that money, reduce my costs, take that money and either just not spend it at all, or the better option is to take that money and invest it into the stock market. Because, like I just said, had I done that for that BMW I was driving when I already had a paid off car, right? But I wanted a BMW convertible, so I got it, right? Had I done that instead of buying a BMW, I would have $38 million today. And I would have only invested 12,000 10 years ago, right? But you live and you learn. So I hope that that is exciting for you guys. All right. Like, that's how you're going to find the money to invest. You don't have to always make more money because it's really not even about, like, wealth is not even always built by how much money that we make. It's really not about how much money you make. It's about how much money you keep. I heard Shaq say this before. We all know Shaq got is rolling in the dough. And you may say, well, Shaq is a basketball player. Like, yes, he was. But how many basketball players have gone broke once they got out the league? Right? How many celebrities, how many people who won the lotto do we know that are broke after they got their money? Right? So just getting money is not enough, right? Getting the money is actually not the strategic part. The strategic part is, how do you keep your money? So you can spend your money on paying extra for your cell phone bill, paying extra for streaming services that you don't watch. You can spend it on, you know, in my case, like I had a landscaper. I still have a landscaper, but a lot of stuff that he do, I can do that myself and actually enjoy doing it. So, like, I could pay him $1,800 or I could not pay him $1,800, right? Like, if I hated gardening, then I would just pay him. But since I actually kind of like it, it only makes sense for me to do it, right? Why not? Why not? I'm giving y'all a little bit of a super sneak peek. So I wanted to remodel my kitchen. I've redone everything in my house except for my kitchen. And I got a quote. I got several quotes for my kitchen. One was for $37,000 and another one was for $75,000. Like a big difference in price, right? Either way, I didn't want to pay it. So, and I could have paid the 37,000. I could have paid either one, but I just didn't. I was like, I just, I don't feel like I feel like I could do something else with that. Because again, I'm looking at that spreadsheet I gave you guys, my budget tracker, right? And I'm looking at my 5-year goal, and I'm like, I could spend $40,000 on a new kitchen, which I really wanted, or I could find a way to get a new kitchen without spending $40,000 or $75,000. So what did I do? You got to be smart about this, right? I decided that I was going to redo the kitchen myself. And I'm doing it. And it's costing me less than 3 grand to redo my own kitchen. And I love this kind of stuff, right? If I hated it, that's a different story. Again, we're not reducing quality of life. We're just reducing costs, right? I love DIY kind of stuff, right? So I'm redoing my own kitchen. It's my summer project. And it's going to cost me 3 grand, less than 3 grand, as opposed to 40 grand, between 40 to 75 grand. So the money that I would have spent on a new kitchen, can I invest that in the stock market now? Because I would have spent that money anyway. See what I'm saying? So if I was going to spend $40,000 on a new kitchen, but I only spend 3 because I do most of it myself and I actually enjoy it, now I've saved $37,000. And if I put that, we're not even going to do the math on that one for Chipotle. If I put that into the stock market 10 years ago when Chipotle was $50 a share, I will have over $50 million right now. You know what I'm saying? So you don't, I cannot beat this drum hard enough. You don't have to go and get new money. You just have to reduce your current costs to find the money to invest. This is how you get to the money without working harder. Does that make sense, you guys? Let me know in the comments if this has been helpful for you. I'm going to drop the link. If this has been helpful, give me a 6. Give me a number 6 in the comments. Number 6 in the comments. If this has been helpful, inspiring, potentially life-changing for you. I know for several of you it was. I mean, we have had 21 people who invested in the stocks just since I have been live. That's 21 people whose lives are for the better. And remember, you don't always have to buy a whole stock. If for whatever reason you can't afford the $66 and $67 it is right now, buy a fractional share. Some is better than none. Some is better than none. Right? You will get nowhere investing in nothing. You will get somewhere investing in something. Okay? You are able to buy fractional shares. You can buy a fraction of a share. If you only got $10, if you only have $10 right now that you have available to spend, you can buy Chipotle. You will just own a 1/6 of a stock. And that's okay. But I bet you if you do what I told you to do and you go through your expenses and you figure out where you can change, but not necessarily eliminate, you can change the costs just to a different service provider, maybe not spending money on things that you don't use, that sort of thing, you will find far more than $10. I assure you. Okay. Thank you for all the 6s. Yes, if this is helpful for you, give me a 6. If you have not subscribed to the Get Money Show, because the name is self-explanatory, right? We are here to get to the money, right? Here to get to the money. We're not here to reduce our quality of life. We're not here to feel like we got to spend 40 extra years just to make some, no, we're going to do this and we're going to do it right. Slow and steady wins the race, but strategy wins the race also. So this is a strategy class, right? We're going to strategize by downloading the budget tracker, figuring out where our expenses are, and we're going to reduce those expenses. And now we've got disposable income because we're already spending that money. We got disposable income that we can now use to invest in the stock market and get stocks. I saw somebody earlier, and I'm sorry I missed it. I didn't call it out, but somebody said that they invested in NVIDIA and Chipotle today based upon my recommendation. I don't know who it was, but whoever you were, I'm giving it up for you. And you guys, give me hand claps in the comments for everyone who invested in Chipotle since we've been live. And if you're going to invest in Chipotle today or tomorrow or within the next couple of days, give yourself a hand clap as well in the comments, okay? Kudos to you. Kudos to you. Lydia says she's about to invest today. I love it, girl. I love it. I love this for y'all. Like I told you, y'all filled me up just seeing that you all are investing in your stuff. All right. I'm going to drop the link one more time to my group on Facebook. We'll be doing a 5-day Fix My Finances challenge in late July or August. But you have to be in the group and you have to be subscribed to the YouTube channel. Okay. 5 days Fix My Finances. If you feel like how I explain things and how I like make things really clear is helpful to you when it comes to stocks, and stocks is a much more complicated topic, then the Fix My Finances challenge is going to be, you're going to breeze through that. Okay. It's free. It's going to be simple. We're going to be on live every day for 5 days and we're going to fix your finances. We're going to find the money to invest. We're going to um, get you out of debt. Okay. Now, you're not going to be out of debt in 5 days, but we're going to have a plan to be out of debt. Okay. We're going to have a solid emergency savings plan set up. Okay. Because honestly, that is your most important thing. You do not want a crazy emergency to occur. Get money crew. You don't want a crazy emergency to occur that, is going to set you back. And now you got to try and dip into your retirement fund in order to like fund this thing, like healthcare and all that sort of stuff. Like, what if you have a medical scare and you get a huge medical bill and now you have no savings, right? Like that's not the business. Okay. So we're going to get you a solid emergency savings setup. We're going to figure out how much you individually need. So Karen, how much you need to live is going to be different than how much Cassandra or Yolanda or Violet needs to live, or even Eddie or Sharon, right? How much each person needs to live how much each person needs to have in their emergency savings account is going to be different. We're going to figure that out for each and every one of you. Okay. We're also going to talk about our retirement funds because some of us are, in our 30s, maybe 20s. Some of us are in our 40s. Some of us are in the 60s and 70s, maybe possibly 80s, right? And so either way, we need to make sure that we have money so we are not forced to work forever. If we want to work forever, great, but we want it to be an option, not a requirement. Okay. So that's something else that we're going to be doing. All that's going to take place within the 5-day Fix My Finances challenge. So in order to be a part of that, again, it's free, it doesn't cost you anything. You will need to be in the group. So click the link to the group, request access, I'll let you in. If you're on YouTube and if you're on Instagram and you want to be a part of that group, just simply go to Facebook and look for Get Money Crew. Get Money Crew on Facebook, and that's how you get into the group. Okay. Cassandra says, I need all the financial advice I can get. You got it, girl. You got it. Grace says she dropped me a 6. A lot of you guys dropped 6s. Lydia says she's investing today. Sharon says she's investing today. I love this. And here's the thing. You're investing in you. I don't get no kickback from Chipotle if y'all invest. Like, this doesn't benefit me at all, right? This is not a course that I'm selling, right? This is me telling you to invest in you, and you guys are doing it. Like, how great. Like, y'all should celebrate. Go eat some cake or something. Like, I don't know. Like, we got to start celebrating the little things, right? Like, we got to start celebrating everything. We got to start celebrating us. When you make a smart decision for you, you got to celebrate it, right? So that is it for today. We have been on, this is the longest we've been on today. Sharon says she's investing on Friday. Yes, it's probably payday for you, girl. Yes, invest on Friday. Like I said, if you can't invest today, it's all good. Invest when you can, but just invest. Like, don't be like, oh, well, I can't do it on the day that the stock split, so I'm not going to do it at all. Like, that's ludicrous. That's crazy. It's crazy. It's crazy. Because okay, before I go, let's do some more fun math. Let's do one more fun math problem, okay? So let's say the Chipotle stock let's say it was higher. Let's say it was more than $50. Let's say it was $250, okay? And I took that same $12,000 that I was spending a year on that BMW convertible, right? The car note. So $12,000 divided by $250. Let's say that was how much it was when I bought it. That's 48 shares that I would own of that stock if I bought it at $250 a share. Then let's say that the stock split and I owned 50 more shares. I mean, not I owned 50 more shares, but the stock split. And as of yesterday, I would have owned 50 times that. So that means I would have owned 2,400 shares. Okay. As of yesterday, I would have owned 2,400 shares when the stock split. And prior to today, the stock was $3,200. So let's do the math and multiply 2,400 shares by $3,200. So, even at a stock price of $250, which is considered pretty expensive, right? If I had done that, I would now still have $7.6 million. Yes, Karen. Thank you, math genius. $7.6 million at an investment of $12,000, even if the stock was relatively high. So again, it doesn't matter when you get in, just get in, right? So if you can't get in at $66, that's cool. Get in at 72, get in at 100, get in at 69, get in at whatever price, whenever you can. Just promise me that for yourself, you are not going to forego this opportunity, because who knows when this opportunity is going to come around again. Okay. With that said, we've been on for 2 hours and 20 minutes, y'all. I'm going to let y'all go. Thank you for rocking with me. If you're not a member of the Get Money Show, Get Money Crew on Facebook, make sure that you join at the link I posted. If you are not yet a subscriber of this channel, I know that this was valuable today. So please hit that subscribe button, because do yourself a favor and hit the subscribe button. All right. Have a great day, everybody. I love you all. Stay tuned for the 5-day Fix My Finances challenge coming up in a couple months. I'll talk to you soon. Have a great day. Bye.